Welcome to our Q1 2025 market update. We are recapping Q1 2025, a quarter packed with surprises, tension, and a few unexpected winners.
It all kicked off with a whirlwind of executive orders from President Trump, setting off a chain reaction of economic uncertainty. The world braced for impact as trade tensions escalated, inflationary risks returned, and global growth slowed. In the US, recession fears flared but didn't take hold. Inventory stockpiling ahead of April's tariffs gave a short-term boost, and the services sector showed resilience. But tech-heavy indices took a beating, Nasdaq down over 10%, driven by retail selling and stretched valuations. Meanwhile, Europe pulled a surprise comeback. Spurred by increased defense spending and delayed fiscal tightening, European equities soared over 10%. And China? The sleeping dragon woke up. With a 15% rally in MSCI China, driven by fiscal support, regulatory easing, and surging investor inflows, Beijing showed it's not done just yet. Add in rising interest in AI names like DeepSeek, and China is firmly back on the radar. Energy and consumer staples led globally. Defensives thrived. But consumer discretionary and tech stocks? They lagged hard. The Mag 7 saw a steep correction, especially Tesla. Now to bonds, Q1 was a good one. Despite volatility, the 10-year US Treasury yield fell back from 4.8% to 4.2%. That decline cushioned multi-asset portfolios. Investment-grade credit rallied. Emerging market debt? Also a winner, helped by a weaker dollar. And what about currencies and commodities? The dollar faltered as trade tensions ramped up. But gold? Gold exploded. It closed the quarter above $3,100 an ounce, its best quarter since 1986. Investors fled to safety as inflation fears mounted. Bitcoin, on the other hand, slipped, down 6.5% after peaking above 100K last year. So, what's the bottom line? Trade shocks are back, and so are inflation fears. Global diversification paid off, and gold is glittering again. Thank you for joining us for the Q1 2025 market update. Q2 is already shaping up to be even more eventful. Stay close for our updates as this economic drama unfolds.